Welcome to the Pexapark Podcast. Every 2 weeks, we'll be bringing you fresh updates and insights on the renewable energy market, along with a guest who'll share unique perspectives on the critical trends shaping our industry.
Welcome back to the Pexapark Podcast, episode 6. I'm your host, Luca, and in today's episode, we discuss the state of 24/7 power procurement with Killian Daly, Executive Director of EnergyTag. But first, as always, let's start with a quick update on the latest market trends in deals and prices, regulations, and the wider energy world. What's happening on the regulatory side? The energy regulation landscape in Europe is buzzing with new developments. One of the most discussed topics recently is Germany's updated EEG auctions for 2025. EEG or EEG is the German subsidy regime. Ceiling prices for onshore wind remain unchanged at 73.5 euro per megawatt, while solar has seen a slight reduction. The real change, though, is more in the proposed amendment to the Renewable Energy Source Act, which seeks to eliminate subsidies during negative price periods from 2025 onwards. No support shall be paid during periods of negative wholesale prices anymore. This was already so in the past, but now the rules would be made much more stringent, moving to a 1-hour rule. That is, if prices are negative for 1 hour, no more support. The move aims to discourage production when prices drop, pushing renewables to align more closely with market dynamics. Meanwhile, France awarded CFDs for 2 floating offshore wind projects and a mix of solar and onshore wind projects in its latest tenders. Floating wind projects secured CFDs at an average of 89 euro per megawatt, igniting debates on whether such prices sufficiently cover the high levelized cost of energy for this cutting-edge technology. Just for reference, in the same auction, solar projects were awarded at an average of 80.3 euro per megawatt, which is very high considering that on bilateral market, Pexapark sees offtakers pricing shy above the 50 euro threshold, always excluding GEOs, and this for a 10-year pay as produced. As long as the state is willing to pay so much more, it will be difficult to enable more volumes on the French PPA market. Now let's look at prices and deals over the last 2 weeks. PPA prices all over Europe continue to reflect mixed trends. For example, in Sweden, the renewable energy sector faces significant challenges as low average wholesale prices deter new investments. Developers are adding battery storage to solar projects to enhance flexibility and trying to improve capture rates, yet the gap between buyer expectations and developer needs often remains unbridgeable. Currently, you simply need buyers willing to pay a huge green premium to realize those new energy capacities, be it solar or wind, and this in most Nordic price zones. In Poland, when we look at the latest CFD auctions, we saw how solar continued to dominate with 1.5 gigawatt awarded and onshore wind just securing a few slots. Onshore wind is actually a very interesting example in Poland, as those projects are in high demand for PPAs. Off-takers seek, namely, wind profiles. And why is this the case? Well, there's a lot of solar built, and the combined profile is often seen as desirable from an off-taker point of view. Also very interesting, many onshore wind developers in Poland are leveraging the CFD as optional hedge, with higher PPA prices outside CFDs supporting bankability. This is a real particularity of the Polish CFD design, as you can move volumes across time. So what developers do is that they secure first an attractive 5 to 7 year PPA and postpone CFD volumes to later years. So really interesting PPA and financial engineering going on here. And again, a nice example of the interplay between auctions and the PPA market. We have a great piece on the Polish CFD and PPA market right now on Pexapark platform. Check it out. We put a link in the footnote. Then, in Germany, we also had auction results for onshore wind, hitting an average award price of 71.5 euro per megawatt hour, underscoring the necessity of auctions in driving volume. Long-term PPAs, however, in Germany remain below auction prices for wind, highlighting a bit the price tension in today's market. Finally, it was reported by Montel that Norsk Hydro, one of the largest PPA buyer worldwide, known for their super large PPAs, stated that the era of large PPAs is over. That's a very catchy title. But upon closer examination, it revealed that it wasn't so much about demand saturation from Norsk Hydro, but both about implementing a simple but very effective risk management strategy, namely, do more, smaller deals, and by that you achieve an averaging effect of your purchase price. But there's also concerns that there's insufficient development of new renewable capacity in the Nordics. And what has been trending on energy social media recently? Our most popular tweet, respectively post, was titled "The Greatest PPA That Never Was." It revisited a fascinating 2009 agreement where G&E signed a PPA with SolarN for 200 megawatt of space-based solar power, expected by 2016. Now, this never happened, but nevertheless, there has been lots of progress lately, and maybe in the future we will see some sort of space-based solar power. Let's see. Also, what we noted that lately wind power is getting a lot of hate. We have Trump vowing to ban new wind farms. We have Germany's extreme right wanting to tear down all those windmills of shame, as they claim. So really lots of toxic vibes on this topic and on social media. But thankfully, very little real-life impact. Actually, as we just reported on the case of Poland, the real thing happening is that wind profiles are underrated and commanding premiums, as they have a complementary fit to the faster rising deployment of solar power. As always, links in the show notes or simply search for hashtag PPA on LinkedIn. Finally, what happened in the wider energy world? A lot, so let's go through it. In Europe, the offshore wind sector is set for a transformative year. With a roadmap of 45 gigawatt of auctions just in 2025, this year could be decisive for the overall build-out of offshore. France, with 15 gigawatts in auctions, and Poland with 4 gigawatts, are set to join the top league of offshore next to the United Kingdom, Germany, and the Netherlands. Also, it looks like the planned auctions will incorporate learnings from the recently failed offshore tender in Denmark. Namely, they will have some sort of revenue stabilizing elements. Success in this asset category is essential in further powering the energy transition. High capacity factors, big volumes, and complementary to solar production. Meanwhile, in the US, Constellation's $30 billion acquisition of Calpine creates the largest power generation company in America. With Calpine, Constellation is buying a lot of gas-fired capacity, which will help Constellation to profit from increasing demand. Linked to this investment, the Financial Times recently noted that the US is heading for a natural gas power plant boom as artificial intelligent demand is soaring. By 2030, 46 gigawatt of capacity could be added through 80 plants, according to Enverus. Despite clean energy growth, renewables aren't yet sufficient to power the needs of big tech. This shift, unfolding under the new government's pro-fossil fuel stance, threatens climate goals, with gas capacity now growing faster than ever. Meanwhile, utilities and manufacturers are investing billions to expand capacity and meet this AI-driven demand. Finally, the world's largest Bitcoin mine, nearing completion in Texas, will operate with a total mining capacity of 1 gigawatt. This development as well highlights the growing demand for energy-intensive operations in the US. Hyperscaler investments alone, with over 250 billion in capex for data centers, add to the strain on energy supply. This interconnection of energy, AI, and digital infrastructure is shaping future market demands and price volatility. And now to part 2 of the Pexapark Podcast, where we have a guest talking the state of 24. I'm very happy and pleased to have with me Killian Daly, Executive Director of EnergyTag. Killian, welcome to the show.
Thanks very much for having me, Luca. I'm a great fan of the show.
Killian, tell me, who are you and what is EnergyTag doing?
Yeah, so I'm the Executive Director at EnergyTag. So EnergyTag is a non-profit organization. We're based in London. We have a global focus on enabling 24/7 carbon-free energy. And we do that through 3 ways, really. We have some voluntary standards for enabling this hourly match between the production and consumption of electricity. We work with many organizations, companies on the supply and buy side as well to create these market mechanisms. And then finally, we do quite a bit of advocacy, both in regulation and on voluntary standards like carbon accounting standards to make this accounting more granular, and that eventually leads us to get to 24/7 carbon-free energy.
24/7, that's like the hottest topic in the PPA world for, well, months or years even. So maybe let's start really with the basics, Killian. What is 24/7?
Yeah, sure. So I think at a very kind of, there's different definitions, but I think at a high level, it's basically about consumers matching their consumption by the hour on the same grid with clean energy. That's the most basic high-level definition. Typically, when we buy green energy today, consumers match on an annual basis, and this obviously won't get us to deep grid decarbonization. We need to move from that annual to hourly basis, in particular to recognize the variability of renewable energy production profiles. And so I think that's kind of the highest level, simple definition I can give.
So every single consumption is being matched with green power.
By the hour, exactly.
And what does it take, just like physically, that this is done and recorded? So how can I, if I'm a consumer or a producer, what do I need to do that?
Yeah, so basically, it's not, I think it's not entirely new information, right? You basically need meter data of the production asset. You need meter data on the consumption side, and that allows you to match by the hour. It's really, at a very rudimentary level, you can do this on a kind of a 3-column Excel sheet, right? Also, what we need really to scale this and make sure there's no double counting, that this can be done completely in a standardized way. We need granular certificates. So like hourly guarantees of origin, hourly RECs that can be, purchased, for example, bundled into a power purchase agreement that enable us to have this third-party verification of this hourly matching that is happening. And so that's very, very important to develop around the world. And we've already, this is something we work on quite a lot. We've already seen that developments happening in Europe and the US and in other places also. But there is more work to be done to change how we do energy tracking from annual to hourly.
Can you give some practical examples of producers and consumers coming together on a 24/7 deal or transaction?
Yeah, sure. So, I think one set of organizations that we've seen being kind of at the forefront of this, or leaders, is some of the technology companies like Google and Microsoft. I think you know better than I, but they were also involved in the early days of power purchase agreements, and so they have for example, signed PPAs and contracts in Europe and the US. Google have done this in Virginia, and so Microsoft 500 megawatt PPAs with AES, where there's a commitment to match 90%. Of demand on an hourly basis. So I think what's interesting there actually is, they're blending together solar, wind, battery storage to get 90%, not yet 100%. So 24/7, obviously, in the name, it's a target, it's an aspiration, but it's also this paradigm, right? Where we start to move away from aiming for 100% annual and going to that hourly level. And if that is only really workable today at 90% in the geography that you're looking at it, then that's fine. That's great. At least you're acknowledging I have 10% of the job left to do. But I'm already kind of having much more firmness, I would say, from the power purchase agreement than, a single technology, wind or solar, which obviously have been the kind of dominant type of power purchase agreement across the world to date. So yeah, I think I fully expect to see more moves towards this, hourly matching percentage being embedded in power purchase agreements. India was just there last week also, and actually it's really interesting what's happening there. So, you have examples of a large green ammonia facility in India that is going to be supplied with 1.3 gigawatts of close to base load round the clock green power, bringing together lots of solar, pumped hydro as well to kind of firm up that renewable. So I think that's a very interesting example. Let's say outside of the Western tech companies doing this. So yeah, that's just kind of two examples. And I think one property that we see is always this hybridization or blending of multiple technologies into renewable energy deals. And this, for me, is inevitable. This has to be the way forward if we're going to kind of, keep PPAs as a valuable product in terms of green claims, but also in terms of price hedging.
So, and can you explain how this is done practically? So if you, for example, say, we take a few different technologies and mix them, and then we take a consumption profile. So do we look at this ex post and see how many hours match?
Always the accounting. So today, if a company is claiming to be 100% renewable, for example, that accounting is done ex post. That's done after the fact. Because we can never fully predict the future, right? So there is also an element of this, when you sign these hourly matched PPAs, at the end of the day, the accounting will be done after the fact. But we can use predictive models, stochastic analysis, etc., to kind of get an idea for the profile that will be delivered. Relatively precisely, at least, but after the fact is when the accounting will actually happen, and the percentage matching or the CO2 emissions of that electricity supply would be calculated.
Interesting. And when you say, for example, let's assume we have a hybrid deal, we have solar, we have hydro, we have some batteries, and then we have a certain profile. We look at it, we have a high degree of matching, and then we say 90%. And is this just the absolute numbers over that period, or what is the 90% calculated against?
There's various methodologies for doing that, but basically that's calculated, taking the megawatt hours generated all over the megawatt hours consumed, but the calculation being in distinct, per hour, you can only basically claim the wind produced if it's produced in the same hour. And you run that calculation and get then an annual average, right, of the matching that you're doing on an hourly basis.
Interesting. And so what about if you're in an already very green grid? So I guess it has a different quality stating I'm 24/7. Let's say Switzerland, which is all hydro and nuke versus, let's say Poland still has a large fleet of coal plants.
Yeah, no, absolutely. And that kind of comes to another point. So typically when we think about 24/7, I think there's these three pillars that sometimes people talk about. There's this temporal aspect, that's hourly. I think people understand that. There's this deliverability or geographic aspect, that it should be on the same kind of grid. It should be within France or within Germany or within ERCOT, right? Not anywhere across Europe or anywhere in the US. And then finally, which is very important to really drive long-term impact on the grid, there's the additionality, right? So if you're, located on a grid with, let's say, 15% hydro, and you sign PPA contracts to make you 24/7 just based on existing hydro plants, then okay, fine, but you're not really contributing to decarbonizing that other, that other supply that's coming to you, right? That, in many cases would be quite reliant on fossil fuels, for example. So I think the most, ambitious regulations we've seen, the most ambitious targets we see on 24/7 also include this incrementality or additionality part to them, right? Like where we're making sure that, okay, we're keeping existing carbon-free electricity online. That's important, but also making sure that we're, contributing to new deployment of renewable energy. That I think that's very, very important. And that's the case whether it's in Switzerland or in Poland. Obviously, right, in terms of a global decarbonization perspective, it is more important that if you have load in Poland and Switzerland, it'll make most sense for you to really focus on Poland, because that's where there's more of a job to be done, I would say, in decarbonizing the grid.
If I'm a producer that wants to get ready for 24/7, now, one thing I understood, it is good to have different technologies.
Yeah.
Because it adds complementarity. Secondly, it makes sense to have batteries for obvious reasons, or storage like a hydro. But do I need to do anything else? Like, do I need to have any energy intelligence to optimize them? What do I need to do?
Well, of course, the first, I think, as you kind of mentioned earlier, like a key property of these 24/7 or close to 24/7 deals is multi-technology, is having a portfolio where you can dip into, if you just have a solar portfolio, like you're going to struggle, right? And we're, very well, we're already seeing that in places like Spain, where, the value proposition of single technology solar is questionable, given cannibalization, given other costs associated with firming that up. That is very questionable. I used to work in a very large electro-intensive consumer called Air Liquide, a big French industrial company, where I was helping oversee a global portfolio of about 40 terawatt hours of electricity consumption. And my job was price hedging. So I was really working a lot on the hedging of that power. I worked a good bit on PPAs as well, maybe about a gigawatt of PPA deals. And honestly, from an electro-intensive perspective, we always looked for these firmer PPAs. We love things like, offshore wind, if you could get your hands on it, because ultimately we're basically baseload consumers. And frankly, signing a solar only PPA from a risk perspective was always a very complicated sell. And so that, back then I was already starting to think about 24/7 and hourly matching and thinking about the suppliers, not to name them, but there were certain, suppliers who I think were doing a very good job in the contracts that we were negotiating to offer that firmness, to realize that that's the product that we were looking for from a risk management perspective, because companies will only go so far. Most companies will only go so far in playing a kind of a premium or taking on massive financial risk when they're buying, when they're signing long-term contracts. So I think suppliers who are having that multi-technology portfolio, who have, I think, the understanding of the customer needs as well, what hedging products they need, and for sure the energy intelligence that you mentioned, it is a more complicated data task. Your forecasting will have to be better. How you think about the customer's load profile and how that matches to your supply, that will have to be better. So of course this will, I think that the companies who are best able to use things like AI and heavy data processing and forecasting, they're going to be in a good place, I would say, for this paradigm.
We talked quickly about incrementality, kind of additionality concept. Is it somehow possible to show the added value in euros or in dollars compared to standalone PPAs?
Of increment of a firm profile, or of the additionality?
Correct, of a firm profile. If I combine assets, if I do extra work as a producer.
Yeah, well, I would say, and that's something we've discussed before, the price of a PPA is not its value. A solar PPA at at 50 and a solar plus store, at 50 euro megawatt hour, maybe matching 20% of your load, and an 80% matched one with a multi-technology portfolio, let's say at 100, let's just take numbers. They're very different values, right? Like they're different prices, but it's not necessarily the fact that the 50 is always better. It really depends on how much you have to spend otherwise to get the electricity you need. And this comes to the hedging value. So ultimately, it's, the value of that profile is, I suppose, the money you avoid paying to firm up that profile otherwise from the spot market, for example. And I think that's something we need to do a better job. I think as let's say experts on electricity and green electricity and PPAs of explaining, right? Of course, a 24/7 match PPA is not going to be the same price as a solar one, but it's going to provide certain hedging value and certain properties in terms of how you're sourcing electricity that are more valuable, objectively more valuable, especially in an increasingly volatile atmosphere, I would say, and a volatile electricity market. And due in part to the growth of renewables. You guys have actually worked on a piece of work that I was also involved on. I think it was in 2023 with your electric. So Pexapark was involved in that study, looking at basically the hedging benefits of different types of hourly matching. So there's already numbers you guys put to that. Obviously, in an extreme priced year, like a 10 megawatt consumer in Germany, could have saved over 10 million on their electricity bills from an 80 or 90% firm PPA. That's the approximate numbers. Obviously, that's in an extreme price year, but basically, you guys saw benefits even in medium priced years as well, like 2021. So that's really the way of looking at this. You need to look at it like, for example, a retrospective analysis of how much would it have cost me in total to buy electricity if my PPA had been firmer, and so that is something that's done already, and I suppose you can add that to the show notes or whatever the study done with your electric.
Yeah, we will add them. Maybe let's take a step back. We started out saying what is the state of 24/7 in Europe or globally. So just reflecting on this very big question, what would you say compared to 2 years ago? Where do we stand in 24/7?
Well, I think there's various ways that this movement kind of evolves. I think there's things around, regulatory standards that are going to require this to prove greenness. That's one interesting place where, Europe for renewable hydrogen is requiring this hourly match of deliverable new supply to electrolyzers so that you can claim green electricity with your PPAs. So that's embedded in regulation coming in 5 years. But obviously also any PPA being negotiated today for an electrolyzer needs to kind of consider that. The US have the same rules, more or less, that came out just back in December. So we're seeing basically that paradigm again being implemented in regulations, often linked to very large subsidies. So that's one very, I think, encouraging area where we're seeing a regulatory driver for this to prove greenness and to get money for that. Also, the global standards on how companies do their carbon accounting, this greenhouse gas protocol, which is the accounting standard used by about 90% of Fortune 500 companies to do their electricity emissions accounting and net zero targets, that's being changed at the moment. So I'm part of the technical working group on that. And again, this hourly local matching is one of the leading proposals there. It's an early part of the process, but it's looking very promising, actually, that, given the evidence and kind of logic, I think, for moving in that direction, that, in the next couple of years, we'll see a much more wholesale shift because of how companies have to do their accounting towards these types of contracts. So I think having those frameworks there is really important. Also, we've seen, I mentioned the deals done recently. I think we've seen some really interesting things happening in the market right now today. Hybridization of PPAs in Spain, right? Like this, for me, that is part of this move to 24/7, right? Like it's not 24/7 matched yet, but it's all part of that same logic of thinking more on a granular hourly basis, thinking of technologies like storage and demand flexibility and how that all integrates. The Greenco ammonia project I mentioned in India. recently, I know there's not a whole pile of detail on that, but we saw this large announcement, 1 gigawatt baseload solar from Masdar in the Middle East. I don't know all of the details of that, but again, extremely ambitious, extremely exciting to see this kind of coming right now as projects being announced. So I think things are actually moving, faster than some would think, and I think a lot of that will be driven by fundamentals of solar and storage getting so cheap. And I think that's something we really can't underestimate in terms of how fast that is happening. But that said, there's need for massive scaling, right? Like, we are still in the early days of this movement. Most buyers are not thinking about this in detail. They're not doing this in detail yet. So I think a lot done, a lot more to do is how I would kind of put the current state of 24/7.
Thank you for this overview. What would you say are the biggest bottlenecks? You're talking a lot about standards, harmonization. Are there some fault lines here, or?
I wouldn't say there's fault lines, but of course, if you're changing a market structure, if you're changing how this is systemic, right? It's not just one individual project. It's kind of rethinking about how companies do things like report their emissions, do things like procure green power, sign PPAs. This is quite systemic. So naturally it will take time, right? And of course you need to update standards because it raises the bar. And that's super important. You need sort of regulatory drivers in certain cases. You need things like the update of the guarantees of origin system in Europe that I mentioned earlier on, where the data tracking infrastructure gets up to date, so we have this hourly green energy price. I think that's very, very important. That's not a trivial bit of work, but I think it's incredibly important. And again, I think it's not we're not going and inventing a whole new paradigm where we need completely new metering and anything like that. A lot of this is basically based on the fundamentals of power markets, which obviously match on a 60 or 30 or 15-minute basis, but they're just matching grey power. They're not looking at if it's green or not. So we're layering on top of a lot of existing infrastructure as well, which helps.
When you would give an outlook, what would you forecast to be pivotal milestones in the 24/7 movement? Let's look at 2025 or maybe up to 3 years out.
Well, obviously, I think that more deals being announced that are, specifically either publicly or within the contract requiring this level of green firmness. I think that's from the PPA perspective. I think that's a super interesting metric to be looking at. We've seen a few gigawatts of them announced already, but I think that needs to continue growing quite fast. Again, things around the data infrastructure, the more volumes we have of energy certificates actually being traded on an hourly rather than this monthly or annual basis is very, very important. And then, for me, a really key milestone is this greenhouse gas protocol. Given how systemic that is, given it's really, again, going back to my days as an energy buyer, this framed absolutely everything in terms of how we were thinking about net zero or buying green products. So I think keeping a close eye on the changes there, and ideally by its announcement at the end of 2026 or 2027, that would be a very pivotal moment in saying, okay, now we're moving from one paradigm to another, and that has to happen at a system level. So that's something from the standard regulatory perspective that I'm looking quite closely at.
This is very exciting. It's really a pivotal change when we look at how the PPA market is structured and the energy market. So, Killian, thanks a lot for this overview and those insights. Thank you for coming to the show.
Yeah, thanks so much for having me on, Luca.
Thank you for listening to the Pexapark Podcast. If you're interested in more news, data, insights, and analytics on the energy transition, head to our website, pexapark.com, to find out more.